Peter Browning, if I'm assessing whether to invest in a company or not, how important is the board to my decision making?
Well, first of all, remember the board cannot run the company even if it tried. If it met once a month, it would be unable to do so. And I often say, you have a high-performing board, you have a high-performing CEO. On the other hand, it is useful and helpful to look at the mix of backgrounds and experience, the kinds of things that those directors have gone through before, to help you have a better feel for what the quality of advice and information the CEO is getting.
Can you talk about the diversity of the best board possible? Because you need some people from that particular industry, right? But then you also want people who are outside the industry who can give you a fresh look.
Yes, and actually my preference is if you really need someone who absolutely understands that business that well, take the steel business, get a consultant, because they know that business as well as you do. Having businesses that are related or allied, take a Lowe's for example, having individuals who are not in the home improvement business, but that have been in retail is very helpful because they understand the dynamics of that industry.
And how tight should the board be with the CEO? Should the CEO be the chairman as well?
I have no problem with that because quite frankly, after '02, when the New York Stock Exchange listing requirements required the independent directors to meet alone, that changed the world. There is no CEO who would ever have allowed his board to meet alone without him. Now they meet alone. There's every opportunity to talk about how they're performing. Do we have a problem? Is succession coming along well? Me, it makes no difference.
All right, so can you give me an example of a good board right now? One you think which is really making a difference?
Well, quite frankly, it's hard to tell from the outside because the board can't run the company. But quite frankly, if you have a high-performing board, I'll call it, you have a high-performing CEO. So where you have companies that are working well, not just because of the industry, then you've got, I think, very good chemistry going on between the CEO and the team and the board, and they're working well together. And that's the ultimate sign. It's quite hard to tell from the outside.
Well, when Lehman Brothers went down, a lot of people looked at the board and they saw a makeup of individuals who probably couldn't understand what was going on at the firm because what was going on was very difficult with regard to mortgage bonds and their real estate interests. And that's what really people were saying after Lehman went down. Have boards improved since then?
Well, there has been significant focus on the quality of boards and the background experience, and it continues today. But I could show you 10 resumes of individuals who say would make outstanding directors, and they would be a disaster in the boardroom because they're often wrong, seldom in doubt. They're a frustrated former CEO. They want to try to run the company. So it takes skill, background, experience, and ability to work together.
And should they be liable for bad decisions? Should people have gone after the board members for being negligent in a case, for example, like Lehman Brothers?
Well, you're, quotes, protected by the business judgment rule. I mean, if in fact you could show there were conflicts of interest, because you have the duty of loyalty to the corporation, there were conflicts of interest. They hadn't shown due diligence when they were making significant decisions, you could. That would be the test.
All right, well, speaking of that test, there's always been a lot of discussion that some board members are on too many boards or are not showing up for meetings and just collecting the paycheck. So how many boards should a board member be on? Because when you hit a certain level, I guess, in your corporate lifespan, you can get on a whole lot of boards, and why not? They pay pretty well.
Well, you're looking at someone in times past who'd served on 6 at one time, but you can't have a conflict on the schedule. I made every board meeting. They have a new, I will call it a red mark, an absolute benchmark. If you attend or show up for less than 75% of the meetings, you will not get support for renomination or re-election. If you serve on more than, now it's 5 boards, ISS will withhold you. So, I mean, that practice has changed dramatically. So everyone is scrutinizing who's on the board, what's their background, how many other boards do they serve on, do there seem to be conflicts of interest, are they showing up for all the meetings?
All right, well, thanks a lot, Peter.
My pleasure. Enjoyed it.
And thank you for watching The Street.